computer. Now we are recording. Currently looking at ES, S&P 500 futures. We are looking at the 4 hour, which is all I watch basically when I'm trading. Well, not trading, but when I'm visualizing or viewing ES overnight. I removed all of my lines, any text. Only thing that you see right now is the 14 and 30 SMA. I'm actually going to put it to the daily because it's actually make more sense, give us a clear picture, and it will allow me to draw my extensions appropriately. This setup is definitely looking possibly like deja vu. I'm not bearish, I'm not bullish. I'm actually neutral here because direction is actually non-existent at this point. Why? Because we have been getting downside pressure, but it's been on low volume. We've tested last week's lows. We've actually, which is pretty interesting. I mean, we've just been rejecting the 14 SMA on the daily chart. We rejected the 14 SMA since the 6th. So it's not too bad. It's not too bad. I mean, the month is ending anyway. And we also rejected the 30 SMA the following day, which is the 7th. That's when we closed below it. And you guys know how I feel about trading below the 14 and 30 SMA. I mean, until that 14 SMA becomes support, direction is actually it's gonna take a while, or a bottom's gonna take a while to form. But looking over here, when price crossed down, it's been nothing but a 14 SMA rejection, then tests the 30 SMA, comes back down, nothing but rejection. We get bounces and come back down. I'm not saying the same thing's gonna happen, but anything is possible at this point. I think it's actually best if I did actually use SPY. Let me actually do SPY real quick. But SPY has more. There we go. Let's just remove all these levels, extensions. Perfect. Let's remove this volume. Volume actually is declining. And I'll get to that another time. But let's remove that. Oops. There we go. I'm not one to draw like these exaggerated wedges, etc. like a lot of people do on FinTwit. I just like to give you my visual, what I see, what's going on. Like I said, I'm neutral at this moment. We can invert this chart as well, which I can do also to give us a more long-term setup. This can be a big cup and handle, which I like, you know. You can look at it. You can look at this on many different levels. This is definitely not inverse head and shoulders. It's just not. It's not formed right. But a cup and handle, definitely. This is definitely was a V bottom. V bottoms do happen within a cup and handle. I wish they had a curve that I can draw for you guys. Actually, I can do it annotating it. Let me do that. So you have like here, right? The possible handle coming here. This handle can actually come all the way down to here, this level here. Very possible. Which would be considered a falling wedge. It could be a steep wedge. It can be a controlled wedge. It's based on how they want to do it. But like I said, look here. When the 14 and 30 crossed lower, and then when the 14 and 30 became bullish, all right, became a long. I want to actually change this color. Whatever. Then we have it over here, cross lower. Well, now it's green now. It's supposed to be red. Whatever. Okay. So here was a long here. This became a short. Now we're actually in a short phase right now. She actually should have started going short when price actually closed below the 30 SMA after they confirmed below the 14 SMA. But usually when stuff like this happens, it usually bounces and recovers, as you can see here. And also here. So I'm gonna keep it simple. I'm gonna do a fib extension. We're gonna switch it up though. We're gonna do it from the lows, and we're also gonna do it from the secondary lows. And I'll give you that. Basically, every pullback is considered, or the next support level. So we'll start from the lows of 2018. We can take it to we can actually move it up to here if we want to, and bring it down to here. But since that doesn't line up the way I want it to, I'm going to remove it, because sometimes you have to play with it and it's okay to play with it. So we're going to do the lows of the year currently. Same level that we just did. We're going to bring it down to here. I want to get it to line up as best as possible. My goal here is to get my double bars within the current price action, because my double bars are considered previous resistance, which is currently support. Now, a drop below that, we bring ours to 272, which is the gray bar. And I know as well, some of us are used to being bulls. So if you want to be a bull in this case, I'm going to show you something too. I'm going to make this chart bullish. Right now, is it bullish? It's a falling wedge. It's how you see fit. This is a 4 hour now. I wanted to adjust it just so you get a clear picture. Still trading below the 14 and 30 SMA. 279.76. See, the issue here is we can open way below that. We can open here under the double bar, and we can do a short-term long. The trade for this with SPY is we open up. Tomorrow is Thursday. We open up below 279.76. The best bet would to be go mid-range of the double bar will be like 280, 50 calls, all right, to catch a bounce. Because you know how that first hour is gap down and then spikes up depending on how they move it, or it can be a continued move down. I have some gaps I need to fill here. This is an extended move. I know one of our traders has 275 puts. I mean, hey, anything is possible at this point. So also what I'll do here is I'll do a Fibonacci retracement within an extension, and I'll have my levels drawn from here, bring it down to here. This is within. Perfect. We can disregard this one, hide this curve. We can hide this curve, even though these levels are actually accurate. But these are our downside levels. This gray bar here is 278.39. The lowest of that would be around 277.70. So expect like to go long around there. At open, you can short. You can do a 50 cent, like a 50 to $1, like half a point to a point move downward on the open, where they can just push it down and then they can just pop it up, like, and form a nice hammer there. But I mean, anything is possible. This could be definitely a downward continuation. And today when I played the SPY calls, I'm gonna be honest with you guys, I didn't feel those calls are gonna work out. Like for closing to hold into close, I felt like they were gonna do good for a scalp. My gut was telling me that they're gonna push it down more, which I should have did hedge puts, but I was looking to basically just grab any profit that I can, which I didn't either because I was focused on other things. So I'm going to draw some simple levels, right? Simple trend I'm looking at right now. I can draw this from here to here. We have this wedgie, possible wedge. Price comes down here. This is what we're looking at. Then I want to see if I do actually let me do something for you guys. Let me do the negative SPY real quick. Hold on. If you want to look at a chart inverted, you put a negative sign and then you type the symbol or a minus sign. This is SPY inverted. If you want to make SPY bullish. This is how I traded NEO for a short. I looked at it in a bullish way. So if you're not used to playing the short side, make the chart into a bull. Make the chart look bearish. I mean, make the chart look bullish. There's definitely nothing wrong with doing that. It's like here, I'm gonna do a daily chart. There's definitely more upside. Yeah, there definitely is more upside. And by upside, I mean in the bearish aspect of it. This is basically a bearish chart. We're just looking at it the long way. This is an all-time high, new level, right? So since I never draw my levels from there, I always start from the low. That's very important. Always start from the low. Just a short-term extension on the daily. And then what I'll do is now I'll put it at 4 hours so it's broken down more. Remember our gray bar? Let me see if I can get this to pop up here, if it will make any sense. Let me put SPY on this chart here. We're gonna do a side-by-side SPY, negative and a positive. So grid is black, background, perfect. Apply, equity, show that, extended hours, don't need to see that, apply. Show corporate actions, turn that off. Where are we? Okay, show rollover lines, turn this all off. I don't care about all of this extra stuff. Apply, perfect. Here we go. Okay, so we on a 4 hour time frame. See, everything looks different depending on how you have the chart. For SPY, the short to work, SPY would have to basically break above 279.96. But there's going to be a lot of rejection around 278.77. Why? Because nothing but upper wicks in this level. You guys can see that. Minimize a little bit more. I'm going to show you exactly what I'm talking about. And if we trade off of this tomorrow, we can have a successful 3 days of trading to close out the week. So it would be somewhere around here. It's been a lot of rejection. I don't know what level this is here, but this is going to be the level where the price is going to act different. And if it can close above this, then we're going to see 277. But I like it. For a short, I definitely like it. That's why it's like, for me to go short, I would have to go inverted. That's just how I operate. There's nothing wrong with it. It doesn't make you less of a trader. It's just what works. and everybody's different. There'll be no grids. Okay. On in the dark, it's the same thing. Okay. Off. Okay. But as you guys can see, so upside or short, downside for puts. Whatever chart helps you trade better the way you like. You're used to trading long. Hold on, who's this? It gets going down. So you like to trade in that aspect, Z. So my suggestion, yeah, just focus on a regular chart. But see, the thing for me is I have to look at, see, I can look at things going down because I like to look at the support levels. I can look at both charts, but I don't know when it comes to trading SPY specifically, to go into that bearish mindset, I have to inverse the chart to like fully grasp it, because there's a lot of things, everything is different when you invert it. Like I can do, let me remove these levels. And actually I'm gonna keep these levels, right? I can do an inverted extension, which is I'm doing the opposite. I'm going from the highs to this low and to the secondary high, which is here, right? And the funny part is, if you look at it, it lines up perfectly with our current levels. So going into tomorrow, let me actually edit. Oh, crap, I hate when this does that. Thinkorswim does that. Remove. Let me activate this and fix it. So I make it so that it lines up with our current levels that we have, right? Perfect. Now downside is 276.92. If there's no bounce there, next level is 274. So the smartest thing to do would take Friday puts. Oh, actually tomorrow is the same day expiry, right? If I'm correct. We can play it smart and we can trade a day after, a day over, as opposed to same day. You want to be safe because you never know what can happen. See, I can now that's another way for you to do it. For me, I either invert the chart or I do my extensions inverted, which I don't think I've shown you guys that, like the new people. I haven't showed the new members yet. So what I'll do is, let me just remove these out. I remember exactly what I did, right? And it's all lined up. Remove them, turn this alert off. 289.50. Okay, right? So here we go. I'm gonna open it up a little bit more. Sorry, the music needs to play. So check this out, Z. I don't know if you use extensions, right? So inverted. I'm using a fib extension. The high is 294.95, right? So from that high, I'm gonna drop that all the way down to this bottom here, in which it bounced, and then it rejected here at this level here. And it lines up perfectly. Like I want it to line up exactly with the levels. So as you can see, it lines up perfectly. Now I can play this way short. So I'll remove this line here. And we can just focus on this tomorrow. Like what I'll do is I'll go live and I have them side by side, inverted and non-inverted, just side by side so you guys can see how they work. And we always look at the 30-minute when the market opens, always. And I always add my 14 and 30 SMA. Very important. People think a gap up. I mean, how futures are looking right now, definitely not. But what we need to do is we need to at least hold 279.98. A close above that by Thursday. I still remain neutral here, no matter what, but we definitely have to play the downside here. It would be smart to do. I mean, because everybody likes to make money, right? So we break down below 279.98. Currently, SPY is trading at, let me check. $279.63. So SPY is around here. The low here on this chart is 279.93. 279.93, which is 279.98 is here, is this low. And if you want, you can also extend it over here this way, and you still have to keep it at where you had it at first anyway, just so it lines up with these other levels on this end. Okay, much better. And then I can do an inverted retracement too as well. So I can find out what's the medium here. Let's actually reverse that. Let's remove this. Let's do it from up to down, from up and then down, so that it gets to the double yellow bars. Perfect. I like the double yellow bars all the way at the bottom, always. All right, perfect. So downside levels for SPY tomorrow, and the double yellow bar is very important level to hold. If that doesn't hold, then we're gonna break 277.04, which is gray bar, and then below that is 274. 277.04, and then below that is 274, which is purple bar. Let me hide this retracement. Perfect. So it doesn't look overlaid. Perfect. Okay, good. This is a 30-minute. We'll put it at a 4-hour or an hourly to clean it up a little bit more. I know it looks like a little bit congested. I mean, we can go to daily so it's more clean. For intraday, I like to use a 30 and a 15 and a 10. So if I was just to remove this, these are our downside levels below to focus on. But for those, like I said, if you want to literally do an inverted extension as opposed to doing an inverted chart, you can play around with it and see exactly how it works out for you. Or you can just draw simple levels. The reason for Fibonacci extensions and retracements is because it gives you automatic levels. Like I can do this from this low here. Next support would be around here. Oops. There we go. Just regular levels that I have to hold. Previous gaps where it gapped over, gap down. Just simple levels that have to hold. I like my fibs because they color coded, so I know exactly what's important levels to hold for me, as opposed to doing something simple like something like this. Because the thing about this is doing these levels like this, you have to keep removing and adjusting. That's too much work for me. With my fibs, makes life so much easier for me. I'll go from this pullback to this resistance to this pullback and go off based off of that. That's all I need. I like how the levels work right there. Interesting how we close at the lowest double bar. A gap down off of this level, and we have a possibility to come back to test the 14 SMA. 30 SMA is going to take us a couple of days. Usually takes like 3 to 7 days, so 3 days to a week. But going into tomorrow, I don't want you guys to be blindsided. I don't want you guys to just jump into something because, oh, okay. I want you guys to have these levels in play. This is important. Because if you don't know what you're looking for, you're gonna jump into something like, oh, everybody's bearish, everybody's doing this, so I'm gonna buy puts. Everybody's bullish or whatever, I'm gonna buy calls. And there's even times I tell you guys, just wait till I go live to trade SPY. Because a lot of individual names took beatings too. AGN took a hit. Like the volume increased substantially into close. But definitely look out for everything. Definitely look out for everything, for tomorrow. I want you guys to have levels in play. I want you guys to be focused. Don't overthink. Just be patient. Wait till it bottoms out. I already told you guys you have your 30-minute. Use 3 candles to confirm a bottom. 4 candles. If it doesn't bottom by lunchtime, just wait. Wait it out. If they want to rally it, they can rally it. They can rally it anyway. A rally happens up or down. Downside rally, upside rally. We can use this as a double bottom, depending on how we open. Because if the candle closes above this level, 280.09, it's considered a double bottom. It doesn't have to basically open here and then close up to be a double bottom. It can just be a candle. It could be a hammer candle that closes right at 280.09 to make it a double bottom from this level over here, this support, acting support over here. Every single, I'm going to actually use the boxes. Every bounce happens, it's never that big. So for example, all right, this gap down, right? Came down, then it bounced, it came up. Closed down, gap down, and then it closed up, went high, gap down, closed up, closed down, almost basically flat. Sometimes you can pick up the pattern. Sometimes it's hard. It's hard to decipher. Like things like this, I would definitely take a short starter. I would hedge here because this is the fib. This is the fib. This is the upper fib combo, and a close like this at it usually is a short. I rather it close under it and form a hammer than engulfing candle and close at that level. It's like this. Okay, we close down here. Not much of an engulfing candle. But tomorrow, how we can open, it's basically all depends, as you can see here. Nice engulfing candle, took off, and then came back down and closed down. But it actually didn't open up here. It actually gapped down, came down to the double bar, came up, rejected the 14 SMA, came back down, then gapped over it, and then to the 30 SMA, came back down, gapped down under that, and then just tagged back up. I mean, anything is possible going into tomorrow. I don't see any patterns that happen like this today. Very, very interesting though. But we open up mode puts. I'm gonna focus on mode 2. Mode just broke down. Let me clear the mode chart. Mode got messy in the beginning, and I went straight for puts as opposed to calls. and actually hedge with calls. Took the lottos because you never know. But the thing about Mo is it gets aggressive when it bounces. So if we can time this right, we can definitely get a nice move, and with time too on that. Okay, so we can do this with Mo. We can do an inverted extension, right? We'll do it from here. Pull it down to these lows here and bring it back up to here. Resistance. So if Mo breaks 48.93, that's why we took 48 puts. Next level on those, we're looking around 47.90. So about our 48 at least 200% if it gets to 48.90. I mean 47.90, which will definitely be great for us. But you guys get the gist of it. You guys get the point. You guys see exactly what I'm seeing. I mean, this market can cause you to shift from long to short in minutes. It's not an easy game. It's definitely not an easy game. It's fun when you're on the right side. Always fun because it makes you feel good. Just playing with it, trying to see what's next. This is why I don't like to overanalyze anything with markets. I haven't been going live because it's like I don't want to tell you guys, okay, this is it. This is possible to happen tomorrow, but I rather trade it when it's happening. The best thing to do is trade it when it's happening. You can be prepared, but it's best to trade it when it's happening. Because if your levels break and they don't hold, it's best to get out of it. But if they hold, you never know. Everything is always subject to change. So we're looking for 48.93 to hold. Possible gap down. Any gap down in anything tomorrow. Looking for some. Look for some long. Look for next week. But also hedge the week. I think the smartest thing to do this week is just hedge it. Hedge with puts. Short term puts, which is every single day, and next week calls just in case there's a bounce. Okay, guys. So I'll just stop shit. Oh no. We're still sharing. All right. Let me stop recording.